Chris has been a stalwart supporter of Bobcat Ventures for a while. I think even from the very beginning. And we always try. He's been a judge for the competition several times, and we also have tried to engage him as one of our workshop presenters every year. And this year and last year, specifically in the areas of how do you put together a really compelling pitch. We'll get into some of the content of that. But, Chris has lots of experience as an entrepreneur and pitching new business and evaluating pitches. And so, he's able to offer a lot of wisdom on this topic from a variety of different viewpoints. Marianne, do you have anything to add? You've been involved in Bobcat Ventures for a while.
Nope, your last few words there, variety of viewpoints, was where I was going to go. So from the person pitching an idea to the person sitting and listening and deciding on the value and the potential and the even from a competition standpoint now with Bobcat Ventures, the winner of the quality of the pitch in addition to the potential of the idea. So I think that's it. And Chris is an alum from the great early 90s decade. So good pedigree.
You have no bias at all.
I have no bias.
Great. So Jason, Dinos, Lauren, would you be willing to give us a quick intro of each of you? Jason, can we start with you?
Yeah, sounds good. My name is Jason. I'm a senior at Bates. I'm dialing in from just outside of Boston. I study math and econ. My idea for Bobcat Ventures was an app for internet safety. And yeah, thank you for doing this pitch, even though it's on Zoom and things are a little wild. I'm excited for the next hour.
Great. I'm Lauren Barabee, and I'm a sophomore at Bates. I'm a math major and education minor. I'm on Zoom from Auburn, Maine. And my idea for Bobcat Ventures was incorporating education with exercise.
Thank you. Dinos.
So my name is Dinos. I'm a economics and physics double major. I was following Bobcat Ventures in the beginning. I didn't end up coming up with an idea and competing, but I was interested, especially I'm generally interested in entrepreneurship and also getting more insight with this event.
You're muted, Peter.
Oh, sorry. Karen, do you want to say a quick hello to?
Hi, all. I'm Karen. I work in the Center for Purposeful Work with Marianne and Peter, and I'm just always interested in this kind of entrepreneurship, and I just thought I'd listen in for today. Thank you.
No problem.
Thanks. All right. Well, Chris, I'm gonna get your slides started here, and
perfect.
We can get rolling.
Yeah. Well, while you do that, I guess I'll give a little bit of background on myself. As Peter, Marianne said, class of '93 to be specific, and have had a great and tremendous experience at Bates. I was a political science major myself, but my career, roughly 25 years, a little more than 25 years, largely speaking in technology. And 3 years ago, going almost on 4, sold my business and have kind of shifted to what I'll call the dark side of venture capitalism. And so get to see kind of both sides where, I've been an entrepreneur, have launched different organizations, companies, sold them, but now I'm helping a firm called GGV out of San Francisco, which manages about a $6 billion fund, make investments in both early stage, mid stage, and finally growth stage organizations. We see about 2,500 pitches a year as part of that. I do some other advising on the side as well, but and try to bring kind of a unique perspective of, as Peter, Marianne said, entrepreneur and investor. I will say if pegged I'm an entrepreneur first. And so as I join various boards and help different executive teams, I always think about it from an entrepreneur centric mentality. I call this is a tour of duty for me in venture capital. I fully intend on building more organizations in the coming decades, but it does provide a little bit of an interesting perspective to be on both sides of the table. And so that for me, Bobcat Ventures started about almost 5 years ago when I joined the board of trustees at Bates. I'll never forget, I was sitting in my first trustee meeting and I heard Bruce Stengel, who was formerly on the board of trustees, make a reference to this thing called Bobcat Ventures. And my ears perked up. I wanted to learn more about it. And so I've been eagerly participating and helping with the program over the last 4 years. And so share the disappointment in not being able to have it as a formal competition this year. It's by far, for me personally, as a trustee, the most enjoyable thing I get to do. And it provides me an outlet and a way to get kind of hands-on with the students and provide a little bit of impact and value back. Not to say that our trustee meetings aren't riveting, but the Bobcat Ventures meetings, frankly, are a lot more fun, and the competition itself, I think, is a blast. So that's a little bit of background. So what I thought we'd do today, this workshop is on pitch decks, and as I said, the firm I'm with now, we see about 2,500 pitches a year. I work with another firm as well as an advisor that sees about 1,500 pitches a year. So you get to see a lot of variety in what is a good and a bad pitch. And this is a kind of a simplified, boiled down, I'd say, Cliff Notes version of my personal experiences, what I think is a good pitch deck, or could be the structure or scaffolding of a good pitch deck. So I'll run through the content in, call it 20 to 25 minutes. It's just 10 slides. And then I thought we would stop, pause, and I could take any questions on that. And with any time remaining, happy to take any questions in general on entrepreneurship, your individual ideas, just, open floor, open mic, if you will, on anything, venture related or entrepreneurship related. So does that make sense? All right, well, let's dive in. So the kind of structure, if you can advance the slide, Peter, the structure of the content, I'll give you a little bit of just like kind of the outline. What does a pitch deck look like from an outline? There's a series of tips and tricks. There's a single page on resources, and I'd say sources of information you can go to that will build out on the content that I'm sharing, and then we'll have the discussion that I referred to. So again, kind of 10 slides in total. I'll get through it in about 20 to 25 minutes. So when I think of a pitch deck, on one hand, you can, you will have a tendency to try to put a big plan with a lot of detail together. To me, it's, less is more. And, getting to something that you can easily convey, like to your mother, your grandmother, your grandfather, like a very simple story. You're telling a story with your pitch deck. This is not for the MBA student, in my opinion. And I say that because think of the numbers, an average venture firm, if you are pitching venture, or even an average angel investor, they're seeing hundreds and hundreds of pitches. So you need to be able to get it fast. It needs to tell a story quickly, and it needs to be compelling. And if you're wading through a pitch deck that's got lots of 8-point font or crazy tremendous amount of spreadsheets, or all kinds of market data, like you kind of lose interest fast. So the simplicity of it really, really matters. And that storyline really matters. Early stage, you're pitching angel investors in many cases, and sometimes friends and family. And so again, kind of keeping it simple where, angel investors will see, a dozen deals a week. You'll get in your inbox, like if people know you're an angel investor, you'll get 1 to 2 pitches. It can be, quick email with a compelling value prop pointing to a deck. It can be a deck. It can be a, here's my idea and a LinkedIn link. But again, the simplicity is key. And so when I think of the 10 pages, it starts with real quick, what is the pitch? You have to lay out the problem you're solving. You have to quickly talk about your solution. I want to talk about how big the market is overall, and define that. What is the model, the business model? How are you actually structuring your business to make money? Why are you unique? Who's the competition? How are you going to go to market? Who are you doing it with? And then the numbers. Okay, so those are like, and I'm going to talk through in this deck kind of each of those pages in your pitch. Now, your business plan is different than your pitch deck. So your pitch deck is, again, summarizing all this. Behind these 10 slides, you'll typically have a more built out business plan that will take each of these to another level. But again, this is I want to catch somebody's attention. It can be friends, family, angel investors, venture capital, and it can even be used to recruit talent. So, I'm actually working on a business plan right now, and I have a detailed Google Doc going, how I'm building out that plan. But I also have a very simple 8-page pitch deck that I am sending to people to get feedback and to start to recruit a team that might join me in that business. Okay, so pitch deck versus business plan, 2 different things. Obviously, they support each other. Okay, next slide. So at a high level, your first page, like the first slide that people are going to dig into, is your elevator pitch. I mean, and this is something that, as it says on the left here, you want to be able to literally step on an elevator, have a quick cocktail party conversation, have a quick Zoom meeting, describe your idea in 30 seconds or less. And that's hard to do, and follow this down kind of to the bottom. It's hard to do without buzzwords. Like, you tend to get caught into this, all right, we have an artificial intelligence driven machine learning algorithm that does X. Like, everyone says that. Like, what does that even mean? Like, it's not, don't pick all the industry buzzwords. Like, really describe what it does, who does it for, who does it, what problem does it solve? Who are you solving that problem for? Without all the buzzwords. You should have a couple keywords that describe your business. Is it a business to consumer e-commerce app? You guys actually, as you were kind of talking through your different ideas, the education meets exercise. I mean, that's what stuck with me when I heard the simplicity of your elevator pitch matters. And so my advice on the pitch itself is rehearse it, be able to talk about it really, really easily, and just keep it simple, because you can easily get drawn into, buzzword bingo, and then say a lot of words and actually say nothing at all. Okay, so that's kind of the elevator pitch in a nutshell. So your problem and your solution, this one is like laying out the problem you're trying to solve. This, as you describe it, the simplicity is important, but like the bigger the problem, the better. Like, if you're solving a really big product, I'm working with a company in Chicago right now that is a supply chain company. And so supply chain is a big concept, but what he's solving is just the software for logistics, real-time data on where trucks are in the supply chain is becoming a bigger and bigger problem, because a lot more people are going direct to consumer. Obviously Amazon is a machine, but a lot of companies are trying to circumvent Amazon and go direct. So the problem he's solving is supply chain visibility, but then he'll narrow it down on, this is a logistics play for visibility and data and analytics around the fleet, kind of fleet management. So it's a really big problem, but he can quickly get to the specific solution that he's he's driving, you know, and in his particular case, who is it for? You know, it's for large manufacturers. He'll be able to spout off examples. You know, it can be a Procter and Gamble as an example. And in his case, it's large enterprise. You know, it is a B2B and B2C in his case, because it's Procter and Gamble selling to other distributors, giving visibility, but also those same people trying to get to consumer. So who is it for? You know, serving the small to medium business markets, very different than serving the large enterprise. Direct to consumer is very different than business to business. So kind of getting an understanding of exactly who you're selling it to, the personas, but then the industries really, really matters. You know, making it obvious, just kind of showing pictures, giving examples, demos, screenshots. Like, you want to lay out really big problem. Here's what I'm doing. You know, the more, again, story / picture / app prototypes, the better when you're laying out your problem and your solution. Okay. And this is probably one of the hardest ones, because it's how do you stand out? You can lay out a big, hairy problem, but standing out, because people always say, like, this is the slide where you'll get oh, doesn't so-and-so do that? Well, that sounds like the combination of this company and that company. Isn't that already being done? This is where you'll get a lot of the pushback on, oh, that's already done. That's already being done. So it can help to say, yeah, it's like this and this, but I'm doing this. So I think just getting some analogies of other companies, but this is where you'll get that kind of feedback in your pitch deck. Okay, next slide. So now that you've said, huge problem, here's what I'm doing to make, you know, why it's different in terms of the solution I have. Now it's like, how big is the market? So everyone, the acronym that everyone uses is TAM. So if you haven't heard the word TAM or that phrase, TAM, total available market. Like, this is the market you're serving. So, you know, one of the small businesses that I'm working on right now is a direct-to-consumer tequila brand, tequila company. So we have a private label tequila, and then we have see, there's some tequila behind me there. We sell direct-to-consumer. We have a platform called siptequila.com. Tequila, and, you know, ultra premium tequila is about an $11 billion market. Okay, that market for ultra premium is obviously a subsegment of the broader spirits industry. And it's a very interesting market in that it's a 3-tiered system. There's lots of regulations and rules from prohibition, but you have to be able to articulate how big is the market. So we're an $11 billion market. We can then calculate the brands that are in that market, who has certain market share, and then how are we going to go after that? So you want to understand, and your market doesn't have to be in the billions. It can be tens of millions, hundreds of millions, you know, it can be $1 billion. But having a true definition of the actual market you're serving, some level of kind of top down, you can cite 3 or 4 references typically that will give you a perspective of, you know, you could say, you know, you'll use the education meets exercise, you know, education market is X, exercise market is Y, private training is Z. You can start to coalesce around a market size. But at some point, you have to build your bottoms up model too. Like, and this is one of these classic entrepreneur traps. We're serving, this is the line you get all the time. We're serving $1 billion market and we're going to go get 10%. Like, if you say that to an investor, they're going to laugh at you. Like, you can say, I think 10% is available to us, but you have to give them, here's how I am going to go get that 10%. That's the bottoms up math exercise. I'm going to do that by locking down X number of small businesses, Y number of consumers at Z, price per purchase or order. You have to go through the exercise of building up to the market you think you can get as a percent of the overall market. Again, it's I think Shark Tank has done a great job for entrepreneurship, but it's also in some cases ridiculous, some of the things that get funded and are said. And I think one of those is we're going after 1% or 3%. Like, that's too simple of an answer at this phase of your business development. I think you need to be more, in this particular piece, a little bit more scientific about how you build towards your total available market. Okay. And that, again, that can be a bit of an exercise. And there's some swags, there's some assumptions, you gotta, footnote certain things, but going through that thought exercise of, I think I can get this number of consumers, this price per order, going through that thought exercise can be very, very valuable in terms of how you're building your business. So your business model itself. So now you've kind of laid out the problem. Here's your solution. Here's the market I'm serving. Well, how am I going to make money, right? You got to figure out, like, is in some cases, like apps, there's a freemium model. So I'm going to put an app out there. I'm going to get a million users. I'm going to give them a base level of service. And then I'm going to upcharge them 99 cents, $1, $5 for premium services. That's how you're going to make money. Like, just saying we're freemium, we're going to monetize later. Like, not good enough. Like, you need to have, you need to be able to describe, like, maybe it's freemium with advertising. Well, if I do freemium with that, what are the types of advertising, over what period of time? Who is going to spend money on the advertising? So really understanding, like, that monetization strategy. I mean, some of the pitches that, I see, it's the, we'll figure out monetization later. And some investors will bet on that, but many won't. Like, figuring out how the money is going to be made really, really matters. Now, if it's a non-for-profit, if it's a social enterprise, there's some different rules and equations there. But if it's a social enterprise, it's also like, how are you going to fund the social enterprise? How are you going to fundraise? It's like, who are going to be the donors? How are you going to attract the donors? So the sources of revenue piece is important. How are you going to stand out? Like, your unfair advantage? Do you have some IP? Is it going to be talent? Is it patents? What's the secret sauce that you have that's different, that makes you stand out from somebody else? And then with both of those, it gets back to that, like, the simplicity of it all. Like, how do you make it simple? And many times that's going to be prototypes, pictures, screenshots, even mock-ups. But I think showing it to people, like, probably one of the first things I do when I get pitched something that could, like, it maybe I like esports, and I also like the shift to basically gambling, betting online on sports. And there's an interesting intersection that's happening there between esports and gambling. And the first thing I do if I get a pitch in that space, and I actually have that on my LinkedIn, is I want to feel the product. I want to see the app. I want to test it. I want to send it to 10 people and get their reaction to it. So having something to show helps in terms of kind of proving out and testing your business model. Okay, and it'll also help you refine your pitch and your plan as well. So next is competition, and I put this word cloud in this because your competition also can help. You can learn so much from your competition, and your competition can also they can be partners. They can become a bit of a channel strategy. You can learn about pricing. It also is a great way of describing to potential investors what you're doing. Like, if you may have a better mousetrap for, like, just say you're building a better Zillow, for online real estate. You can say, Zillow is a competitor. They do a lot of great things, but we are focusing on this small piece of what Zillow does because they just don't do a great job. And we're going to do it better regionally, and we're going to provide a different level of analytics. But I think I wouldn't be the worst answer here in a pitch deck is there's no competition. Like, there's always some type of competition. It can be somebody doing it themselves, but like figuring out like the closest thing and pointing at it. I mean, I wouldn't shy away from that. Again, it can help you. They can become partners that you can learn from them. But, I tend to want to push people on, if somebody says there's no one doing what we're doing, there's no competition, like my BS meter kind of generally will go up. And so I actually think Like, here, they may not be direct competitors, but here are people that are doing things like us. And then if there's very direct competitors, maybe some strategies, how you could partner with them and what you've learned from them. That same business plan I was referring to that I'm working on, the people that I'm recruiting, we're spending a lot of time actually learning about each of them, kind of sending in secret shoppers to, hey, what are your services? How are you charging? How are you positioning? Where's the IP? Like, we're learning about all of that as we build a plan, as a way of building a better mousetrap in the process. Okay, so that's competition. A couple more slides and then I'll pause for questions. So team is, you'll find most institutional investors, they'll tell you that at least 2/3 of the bet they're making, it can be a $10,000 seed investment or a $100 million institutional investment. They'll say 2/3 plus is based on the team. So, you may have a good idea that with the right team, they know will become a great idea. Most investors, if they've had a success with an entrepreneur already, they'll back them again. And so, but it's all comes down to who is on the team. Frankly, a huge part of it is, there's plenty of businesses that are sole founders, but often, there's 2 co-founders, maybe 3. It's the complementary nature of the team. So what skills do they have together? Is there healthy conflict where they can be better together? What kinds of complementary experiences do they have? The other thing though, is when you're just getting going, having a named group of advisors doesn't have to be like we're giving them all 10% equity, but you know what? Most entrepreneurs want to help other entrepreneurs. So getting other advisors bought into your idea, putting them on your team slide. So, we're working with these 3 advisors. He built PayPal or whatever they are, but getting them to help you. And again, most successful entrepreneurs, they want to be helpful. They want to, be a catalyst for another entrepreneur to do good things. And so my suggestion always, if somebody is like a sole founder working on their own, go find 2 or 3 people that will be your advisors. And then it's incumbent upon you to drive those meetings. They're not going to call you up hey, how's it going? Let's spend an hour. It's, hey, I need an hour of your time. I need 30 minutes of your time. Let's I have a couple ideas. I'll give you an example. A good example is a former coworker of mine. His son just graduated about a little over a year ago. Went to become an investment banker, had a fintech app idea that was actually really, really cool. He reached out to me, I wanted to bounce some ideas off of you. We had a great call. I think this kid's really, really smart. I think he's going to be a successful entrepreneur. He has scheduled 6 subsequent calls with me over the last 6 months. And I love doing the calls because I want to help this kid. And I don't there's no equity arrangement. There's not I need to invest in you. Eventually I hope to. But I think driving those meetings, those follow-ups, his pitch is getting better and better and better each time. And he's probably doing that with 5 of me. So he's getting free consulting and advice, and he's building a network. And so you can list those people as part of your team. And I think that lends credibility to your pitch deck. And then the last one is, I call it the F word. One of the toughest slides in your whole pitch deck will be your financial plan, your kind of forecast. Here's what I think we're going to do a year, 2 years, 3 years. And then funding. If you're going to go do this, here's the money I'm asking for. And I think, that working through your financial model and your road, those are challenge, that will take some real thought and some iterations. You kind of get one out there, you put a model together, you test it, you think through it, you'll revise it. Frankly, when people are making an investment, they're going to haircut any forecast you put out there. It's whatever you say, everyone's going to discount by a huge percent. But you have to have a starting point. The hardest part is, and it's being very specific about your funding and your funding ask. You can't ask for too much, especially early on, because it feels frankly a little bit greedy, because investors want you to be scrappy. The best funding, frankly, comes from customers, not from investors. If you showed me a plan where like you're going to get 80% of your funding from customers in the first year, I am so much more confident than you saying, all right, I need $2 million or $1 million and my first customer is going to come after 2 years. Like, not as good. And so being very specific, like getting enough funding to get product market fit, a minimum viable product, get real proof that this thing has legs, and I'd say in today's world, these can be investments that, anywhere from 50K to 250K, where people are starting to build really good businesses and the flywheel's going with customer money coming in. And so I think being very thoughtful about how much money do you need, and then how you're going to apply the funding. What are you going to use it for? Is it for technical resources? Is it for selling? Is it for online marketing? Is it for your co-founder that you need this person and but they have some cash requirements that need to be paid? So like being thoughtful of not just the financial model, but the funding and the funding ask in that page as well. So that's the context for the 10 slides. I'm going to pause there before I hit the resources and see if of those 10 slides, anything that jumped out by way of questions, comments, before we kind of hit the next couple. Hopefully that's helpful.
All good from me.
Great, thanks, Dinos.
So are you saying that most of these Bobcat Venture pitches will be 10 slides, or are you just saying that your pitch was 10 slides?
I mean, I think, and Peter, Marianne can keep me honest here. I mean, I think the Bobcat Ventures slides, I mean, we've used this workshop before. The final pitch can range from, 6, 8, 10 slides, but also we've seen talk track where very few slides, only a couple supporting images, demo. So, I mean, I think you could play it either way. I wouldn't say this is the absolute, like, you must use this for Bobcat Ventures. I would say, this would be helpful, I think, by way of giving you structure in terms of what you'd pitch. But you don't, again, this is a template scaffolding, if you will, not a requirement for ventures.
And I think this is, oh, go ahead, Peter.
I was just going to say, you're probably also going to want to have supporting slides that are in your deck, but may not be part of your, 5-minute pitch.
Right.
Right. So anticipating questions that judges or audience may ask and having those slides at the ready to support your answers. But I think that this is a pretty typical set of information that most students have used in the past couple of years. Maybe a little bit shorter, but not much. It's pretty typical.
I think we put this together as a workshop because what we were finding in the first couple of years is that some of these major elements were missing in the pitch at Bobcat Ventures, where they would not talk about the revenue model. They would not put a financial projection in place. They would not talk about who are they selling to. They would not talk about the unique value proposition. So these are all ingredients that I think are essential to convincing somebody that you should fund them. And so so that was kind of the original idea to put the workshop together. Is that, hey, if you're gonna win the prize, you need to minimally hit on these things in your pitch. Does it have to be structured exactly this way? No, but like, don't forget to talk about monetization, unique value proposition, catch people right out of the gate with the exec summary. Like, there were some pitches in the first couple of years where, like, when they were done, we still didn't really know what the business did. And so you got to catch people right away. Like, this business does this, for these people, and here's how it makes money. Any other questions, or I can hit resource and then we can open it up. Jason?
One more. So what is the biggest difference between these Bobcat Venture presentations that you see and advise versus the 2,500 a year that you see that are more professional? In terms of both like quality, I understand that there's going to be a quality difference. We are college students, but and then also in terms of content.
Yeah, I mean, I think for Bobcat Ventures, I mean, to your point, this is not, this is a side project in many ways. It's not your thesis. And as a result, it's a more surface level approach, pitch. The level of detail is at a much higher level. What you see, the 2,500, like, for example, a financial model for Bobcat Ventures would be, 6 lines deep, a 3-year financial model, with a basic set of just a little bit of dartboard analysis, if you will. Whereas, a pitch deck that's coming into venture shop, will have the financial model will be, 18 tabs on a spreadsheet, detailed cash flow, a much more, detailed set of financials as one small example. Competitive analysis will be a much deeper competitive analysis that you would see in a traditional pitch deck, like deck versus business plan again. For Bobcat Ventures, it's like, here are the 4 or 5 other firms that look like us. So I'd say level of detail, is one. It's just more thought out because it's for the people that are pitching for money institutionally, like it's everything. It's their life versus a project on the side. Good question. Okay. Any other questions? I'll run through I can run through the resource and we can just open it up. All right. So these are, again, not an exhaustive list of resources, but I would, I'd kind of look through these. You could take a screenshot of this or what have you, but Dave McClure's blog, that's awesome. Great resource. Follow that. Yeah, Perfect Pitch Deck. There's a couple on here from Medium and then Perfect Pitch Deck that are kind of specific to building a great pitch. They'll have some advice and thoughts that are very different than mine, but it just gives you some additional resourcing and insights on building a great pitch deck. Beautiful.ai is, this slide deck was built basically it's an alternative to Microsoft PowerPoint or Google Slides. It's I'd say a sexier way of building a cool slide deck that kind of forces you into simplicity and storytelling and graphics, as opposed to, I think, PowerPoint and Google Slides. They drive you to bullet points and lots of words. Beautiful.ai drives you towards storytelling and imagery, and I think is a good subliminal way of keeping your pitch at a storytelling level. Brad Feld is worth reading. Peter Thiel, those are 2 of my kind of favorite writers as it relates to entrepreneurship. So I have a much longer list, but these are some that, I'd say take a picture of that, do some digging if you want to kind of get some alternative perspectives to what I've shared, but also like Brad Feld, very successful entrepreneur and advisor and board member, and same with Peter Thiel. 0 to 1 is interesting. That's how do you get your idea? Everyone says they have great ideas. Oh, if I would have done that, but like that first step to actually putting it on paper and getting it out there is hard. And so I think that's a really good book to read and digest if you're struggling with that, or you just want some thoughts on that.
And we'll share this deck with people too. So
awesome. Thanks, Peter.
Just FYI. Yep.
So can open it up, whether it be on the deck or in general on your pitches, entrepreneurship, backgrounds, kind of free for all at this point.
I'm going to hop off. Thank you very much.
Thanks, Karen. Good seeing you.
Bye, Karen.
Bye. Can I say?
Yep.
I just had a question, an idea. From your experience, because okay, now we are really deep into applications, and do you think a pitch usually leads into an application? I mean, it's a very vague, very general question, but for sure, does it make it stronger having that let's say that approach?
I don't think a pitch always leads to an obligation. I mean, I'll give you a story from when I was, so I was not kind of, I'll call it formally an entrepreneur until like 10 years into my career. At the same time, I had written over a dozen business plans and pitched them to many, many different people. And yeah, most of the time got laughed out. Like, that's the dumbest idea ever. I learned a ton from that experience or those experiences. And then, you know, the 11th was the company that I ended up selling and doing well on. So to me, it's a part of it's the journey and the experience you get. I think if you know, that last slide that I talked about where, you know, you put your funding ask, I think that's where, like, if you are able to convince somebody, like, I think this is the best, like, tell me what check to write. Like, if you know that if somebody says, I am so excited, I will write you a check, 10, 50, 100, whatever, 1,000, that's your gut check. Like, oh shit, now I'm taking other people's money. Like, and that's for me as an entrepreneur. Like, once I take somebody else's money, like, they're like, I'm going to steamroll everything else because I'm going to make their money return money. And so I think I don't think there's an obligation to pitch, but once you say, yes, I'm taking your money to go, you know, chase down my idea. Yeah, that's the moment of truth, I think, for the entrepreneur. Now, I mean, my guidance there is once you take people's money, when you're taking people's money, I always set expectations with them. Like, this is going to go to zero. Like, this early stage, like you manage expectations with anybody, like in an early stage investment. Later stage is different, but early stage, it's this is very high risk. Lots can go wrong. You know, this is a lottery ticket. And so you manage their expectations. But as an entrepreneur, I think I was like, I have to make them money. Like, so I set expectations really low, and myself, I kind of try to manage them very high. So that's, but I don't think it's an obligation to pitch. I mean, I think once you could, and to me, it's a learning experience. And I actually love I personally thrive on that journey. Like, I thrive on the learning that I get by pitching it and having people bat it down, bat it around, tell me it's stupid. Then it just makes me make it better. Does that answer your question?
Yeah.
Any other questions, thoughts? I think we got about 10 minutes to go, but don't need to use it all if everyone has other Zoom calls to be on.
Chris, I know some of the questions that have come up in workshops over time have been about Bobcat Ventures pitches in the past. And some of the ones that have won, certainly in the 2 years that I've seen, are very different.
Yeah.
And, you know, there were different ideas. We've had social entrepreneurship ideas that have, you know, risen to the top. We've had tech ideas. But from the pitches that you've seen through the Bobcat Ventures program, you use the term secret sauce. Has there been a secret sauce that has kind of served as a theme for those pitches that have fared well in this program?
Yeah, I mean, I'd say a couple. I mean, one, I think back to the point around team, and I think the winners of the past, like the individual themselves, is just super compelling by way of their ability to convey the idea. You believe that with the money, they will do something really special. Like, there's a level of confidence that you get because the person is so, it could be either passionate, articulate, driven, in some cases actually already has the idea in play, like is already generating revenue, already has it in the hands of people. Ali Rabideau, who she won from, it was called Urban Works, you know, social enterprise, helping women who are in women's shelters create a product, you know, out of natural ingredients. Like, she was so compelling, and it was already working. Like, it was a matter of give her more capital because she can do it for more women and have a bigger impact. Like, so great individual, but awesome idea that was already in play. You know, George last year with Nook, like, I actually loved Nook because, so it was a fractional storage that, you know, rent out your, you know, corner of your garage to a college student, as opposed to giving it to U-Haul storage. You know, he had kind of built out a prototype. He had a great idea. It was very compelling, but it was a relevant problem. But he also talked about the space, and he pointed to, in my opinion, specifics, like there were other players and he was going to do it better. So, but I think the person, like the compelling nature of the person, are the wheels turning already? Like, is there already some proof point that it's working? I'd say that's been a consistent theme. And I think their ability to kind of string the story together in 3 minutes, like that's not an easy thing to do. Like, that's, you know, on the spot in 3 minutes, taking tough questions, having thought it through. Like, I'd say that's been consistent for the different winners, is like their ability to kind of stand up, deliver it, take questions, and be competent has been a pattern.
Great, thank you. Any other questions?
Chris, what about a difference between, if there is one, between pitching a non-profit or a social enterprise or another idea, a for-profit of any type, either in Bobcat Ventures or, you know, more broadly?
Yeah, I
outside?
think that, I mean, I think there's some obviously major differences. I mean, I think that pitching the social enterprise, I do think especially right now, I mean, the whole landscape is shifting with everything that's going on in the world, but I'd say that, like, the funding model and the sustainability of the funding model for the social enterprise is always an interesting piece of that pitch. I think there are so many amazing causes, and everyone wants, you know, lots of people want to serve, but like how the funding model will work, where is the money going to come from? I think there's a lot of change right now in you know, the nonprofit space for how there's so much more fractured demand for donations. Like, how you're going to go about that, I think, becomes a really important part of that revenue slide. It's just a different kind of revenue to be thoughtful about, because, you know, is it micro, you know, is it long tail, lots of people giving $50, or, you know, I'm part of a charity called New Story that is 3D printing homes, and they've also built 4,000 homes. You know, they raise money that 100% goes to the homes, but they have 100, they call them builders, which are large limited partners that give, you know, money every year, and they're committed and pledged for 5 years. So their funding model is very, very different. So all the overhead for News Story comes from 100 builders. Anything long tail goes to the homes. And so it's a very different, so I think that, you know, a little bit of a long-winded answer, but in the social enterprise pitch, thinking about how are you going to acquire the donations is really, really an important part of the pitch, because generally speaking, the actual service provided is always very compelling. You want to help this local market, this type of person, really, really compelling. And we saw some of these in the last few years. What's not generally well articulated is the funding sources.
Thanks.
Sure.
If none of the students have questions, I have one other question I want to ask, but I don't want to take time away from the three of you. Chris, how do you think about, we hear about scalability a lot, and that being, you know, a criterion for how to evaluate business or venture ideas. you know, I don't exactly know how to structure this question outside of, you know, how should they be thinking about scalability and kind of what does that mean across the board? You know, how might you define it? And can you maybe give some examples of different pitches you've seen that are scalable in different ways?
Yeah. Yeah. I mean, so at a very, this is like super 100,000 foot level. I think the biggest question around scaling a business generally is the business a people-based business, or is it a technology or IP-based business? A people-based business where, like, to drive more revenue, you need more people by definition, is a much harder business to scale than an IP or a technology-based business. So first, like, which business are you in? Are you people-based or are you technology-based? And then if you're people-based, like, thinking through the management structures, the org structures, like all kinds of issues with geography, you know, is it local, regional, national, global? Like, those all come into play, because scaling something globally that's people-based, really hard. All kinds of issues. Technology-based is different. You still, like, as it gets bigger, you still have similar challenges, but they're not as acute early on. And so I think that's the short answer. Like, first, like, get a sense for people-based versus technology-based. If it's technology-based, often the scalability comes down to, like, the scalability of the technology. Like, what is it built on? Is it built on, you know, Amazon, Google versus Microsoft? You know, there's like tech scalability issues. Then there's distribution. How am I going to distribute my technology? Is it through marketplaces? Is it going to be direct? Is it come to my site? Like, like the whole notion of building an app, there's this, oh, once I build it, like, people are just going to download it. Like this thing called CAC, customer acquisition cost. Like, acquiring a customer for an app is very hard. There's a lot of apps out there. And so it can cost a lot of money. So your thought process around how you scale customer acquisition becomes the technology barrier, if you will, in many cases. But I think you have to think about it first. Is it people versus tech? And then there's a different answer to the question depending on which one it is.
Great, thank you. That's really helpful.
Cool.
Right,
Well, if there's any, I mean, obviously we're at the time here, but I will say, you know, happy to do any follow-ups. If either, you know, if any of you three want to share the pitch and you want to bat it around, like, just like, it is not for me, I love this shit. Like, it's so fun for me. So I would be happy to brainstorm your pitch with you, you know, be an audience to kind of play the venture capitalist. But, you know, I want to make myself available as you kind of think through it. And again, certainly disappointed that I didn't have the opportunity to do the formal judging, but it would, you know, if you guys are passionate about what you're building and you want to talk about it more and, you know, you want some over the shoulder advice, I'm happy to help provide that.